Hey folks, what a view behind me. I'm at Blackbull Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackbull Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackbull Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Hey, what's going on, guys? Brinks Trades back here live for another week of breakdowns. Sorry for that noise if you heard it in the background. Hope everybody's doing well. Hope everybody's doing great. I know it's holiday weekend. I'm not going to be on here for too long, but I did want to come on and break the charts down. So as usual, love to get like the roll call, see where everybody's at, where everybody's from. I see Tony's already in the chat talking about great day. Bricks. I like bricks. I like Brinks. I like bricks. That's kind of cool. Bricks. I might change my name to Bricks. Howdy, SMR graphics. Let's see where else we got it from. Where else are we coming at? Anybody else in the call? Seems like it's 14 other people. That's what it is. Okay, cool. Well, if y'all don't know me by now, I am Brinks Trades. I am the resident indices analyst for the Trading Nut podcast. I have been doing this for about 10 years. It'll be 10 years in March 2015 that I've been trading the markets. And, I'm, getting better every day, right? That's the only thing you can really ask yourself. So I come in here every week and I break down pretty much the futures versions of the NAS100, NQ, ES, which is this S&P 500, and Dow Jones, which is the YM. So, if you guys are familiar with those, obviously you can trade them on Forex platforms, you can trade them on futures platforms. In the US, we're kind of in this middle of this shift of like a lot of traders transitioning from Forex to futures. And just because there's a lot of regulatory issues in the space, dealing with like local brokers instead of the international ones, which, aren't regulated. So they're not really held by US standards. So you've seen a lot of people transition to that for Forex firms and Forex prop firms to futures and futures prop firms. So I'm definitely one of the traders that's making that that's made that transition over the past year. And, I'm happy to, really confidently say that I'm really one of the best futures traders in this space. And I give out a lot of this game for free. So I think I think you guys are really in for a good treat if you guys are following me on my social channels or following me on my Telegram, where I give a lot of this game away for free. So before we get started, I'm going to actually share a couple of things. I'm going to share my screen. And so I want to do this. Yeah, again, I've referenced this, a few times over the past few weeks. That again, I read this local report online that said the average American has about $10,000 in their savings account, right? And so, when we talk about like money and things that you can do with money, right? I saw that and it really resonated with me because, when we see these numbers of people trading online, usually it's like, these guys like, and you guys can probably figure out the traders, but they have thousands of dollars in their trading accounts and or if not millions of dollars in their trading account. And they're pulling off $20, $30, $50,000 trades. And they, sometimes you can get a little overwhelmed with watching them online. So I wanted to kind of say, okay, well, look, if the average American has $10,000 in their bank account, right? What can you do with that $10,000? And how can you start to grow as a trader, right? And so one of the things that I did was really just this 10K challenge that I started on my Instagram, or I'm sorry, on my Telegram account. So if you guys are in Telegram, you guys have been bearing witness to this. Um, but one of the things that I did was really just take a $10,000 account and see how can we build this up over the past, over a month, just to kind of give. Obviously, it's going to vary, right? Like I can't. This is just my results. They're not typical, and I'm not saying this is not financial advice, but um, how can we take this $10,000 and really grow it and build it? Um, in a month's time, in a couple months' time, and really see what we can do with that from there. And so what I did was, again, this 10K challenge, and I'll show you the results of this before we get into the charts, just to kind of let you guys know, hey, this is real. Hey, he's doing what he says he can do. And then also, you know, I'm not saying these are results that you will have, but these are results that are possible, right? And I think that's the most important thing. Let me see if I can share my entire screen really quickly. Let me do this. Oops. Sorry for the technical difficulties this morning. It's holiday weekend. I'm not all here today. Let me see if I can share this. Oh, let me do that. Oh, it's annoying. Okay, let me do this instead then. I'm gonna show y'all. I'm gonna make sure this is up. Let's do this instead. Present. And while you guys are watching, if you guys have any questions, throw them in the chat. Without trying to log into my actual back office because it has my account number in there, and I'm not trying to give that out to the world. Let me see if this works. Boom. Okay, cool. Awesome. So basically, this is a screenshot from my Amp Live account. Amp Live is the broker that I trade with. So this is something I put in the chat on Friday, right? So we started this month with a $10,000 account, right? So I think it was 10,000, maybe like 180 bucks or something like that. So it was like a little over 10,000. And I just had a little bit over that just because I didn't want with withdrawal deposit fees that kind of knock you down a little bit under 10,000. So 10,000. So basically in 1 month's time, so I think I started this challenge on August 1st, like the first week of August, and was able to take this $10,000 account to about $17,560. Biggest trade I had was, I think, Thursday, and that was a $4,000 trade, right? To kind of cap off the month. But really, was able to kind of go into the markets and make about $1,000 a week on one trade a week, right? Not over trading, not really looking for a crazy amount of trades every hour, every session, right? But really looking for the best, highest probability setups. Was able to take this account and get a 75% return on it in less than 30 days, right? And so, again, that's not to say this is typical. This is not investment advice. I'm not saying that you can go out and do this, but I'm just saying that this is a possibility, right? When you are trading, that you can grow accounts. And obviously not every month will be like this. Not every month will be a 75% return on your capital. That's, it's pretty good. But just saying, like, the average American has $10,000 in their account. Man, look what we just did. We doubled that almost in a month. And I'm not saying, again, that that's something you're going to be able to do. just simply stating it's possible, right? So if you guys are trading, you don't want to do the prop firms. Um, you know, it's always an option for you. But let's go ahead and get into the charts. So Lizzie said, "Hey, I'm here for US30." Shout out to Lizzie. All right, so let's go ahead and get these charts. Enough of me trying to brag. Again, not bragging, but just again trying to show people, motivate people what's possible. So imagine what you would do with an extra $10,000 or extra $7,000 in your account, right? And what you would spend that on. So let me go ahead and share my screen and we go ahead and get into it. Boom. All right. So we talk about dollar. Let's talk about dollar index. So if you guys know me by now, you know that I am looking at dollar first because that is the kind of gives me the idea that everything is kind of based around the dollars. Our indices, our stocks, our currency pairs, right? So really having a good understanding of dollar is going to allow us to really make good decisions and kind of have good biases for the rest of the pairs. So again, we've been on this bearish kick. Well, actually, as we end this month, since yesterday was the last trading day of the month, I want to go back up to the monthly time frame and then really look and see what's going on here. So first things first, we've had a large degree of consolidation over the past few months, really since the beginning of 2023. So the last 2 years of dollar has really been consolidated. We traded up into this overarching fair value gap right here, right? Boom. And then we really have declined from there. And not only have we traded into this overall imbalance here, but there's also been some other imbalances that have been respected here too. So visibility. So again, we traded into this one, formed another one, and then we're consistently going down. Now, again, we know with the monthly time frame, we usually tend to end the month on a wick, and if we were having a bearish month, we're probably going to close with some other wick. That means that last week will probably be, or the last week or last couple of days in that week will probably be bearish or bullish, kind of to offset the trend that we have in the month, right? I talk to my students about the formation of candlesticks and how that works. So if you're not familiar with that, become a student. I'll be giving out game. So weekly time frame, let's go to dollar. So again, what we wanted to see last week was, potentially us to continue to run through this low. What we actually did is we hit this target the week prior, right? That was our target for the previous week. We swept that low. We wanted to see the market really run down here. Again, knowing that the end of the month was here, I kind of made the call that we potentially could see a counter trend week to end the week off or end the month off. But going into this week, what I want to see happen here is the market really trade back up into this range and really look to start to fall over the next week. So this is what I want to see happen over the next, at least over the next few weeks. If we jump down to the daily time frame, I don't think we've had a pure break in structure. Yeah, there's a couple things here that I see. So this is that weekly fair value gap that we've talked about. I'll go ahead and erase some of the stuff in the background so y'all can get a better understanding of that. But there's a couple things here. This volume imbalance that I see here from these two candles that overlaps with that weekly fair value gap. So I'm just going to mark that out. So ideally, we're going to want to see something like that. If we start trading above this weekly gap, then that could be a good sign that we could be reversing. So I really want to see how this reacts. Ideally, we're going up just to go down again and continue on with this bearish trend that we've been seeing on the weekly. So that's dollar. Again, I'll be looking for a price to really tap up into that 101.41 level, 101.64 level, and then go from there. So if we're going to be bearish on dollar, we're probably going to be bullish on indices. But let's check them out and see. I also am going to make the note that I'm probably not going to be trading this week. This first week of the month, September is going to be a very volatile month. It usually is. The reason for that is if you think about summertime, a lot of the volatility that comes in the market comes from hedge funds, big banks, institutions. This month of August is usually a dead month or a slow period because people are on vacation. Just like we're on vacation in our jobs, like hedge funds, big banks, institutions, they're all kind of trying to capture the last bits of summer, right? So a lot of trips, a lot of people away from their desks, a lot less volume. Even if you think about retail traders, a lot less volume in the markets, right? So ideally, um, there was a lot less volume. And so going into September, we could see a lot more volatility. I usually like to kind of sit the week out, that first week, or at least the first couple of days, just to kind of see what's going on with the market. So with that being said, I'm going to go up to the NASDAQ and we're going to go ahead and look at that. So really, there's a couple things here on NASDAQ, and I'm going to pull up. This is the micro, but let me pull up. Yeah, we're pretty much getting the same thing. Okay, cool. So there's a couple things that I like here. So ideally, what I wanted to see last week, and let's go to the monthly time frames. This kind of should give you a good idea of like what is going on in a monthly perspective. But we trapped into this order block here, really, and all that volatility last month was really just us running to that order block. I think a lot of this happened on that flash crash that kind of happened at the beginning of the month. I think they said it was the worst single day since like 1987, like Black Friday or something like that. So I don't get scared when people say stuff like that because I know that this whole game is controlled. So it's like, and again, I talk a lot about that with my students. So like, if you are one of my students, usually they might have fear in particular trades, but knowing that the market is supposed to crash, it's supposed to go up. Like there's a lot of reasons for these things. And so like when people say that, the intent is to drive fear in the market. And we don't fall for that around here. So let me see. So we tapped in this order block again. So from a monthly perspective, we left a huge wick. We know one of the things that we look for levels to watch is going to be consequent encroachment of that wick, which is this level here. So I'm just going to make a note here. It's this consequent encroachment. So ideally, I want to see the market stay above this level here. I'm just going to make the note that says monthly CE. Now, do I expect this to come all the way back down here? No, but it's just kind of like a level that kind of in my head lets me know like we're staying above it. So on the monthly level, we should be bearish. Let's go to the weekly level. This is where stuff gets fun a little bit. So we had this fair value gap here. This is the daily gap. Let me hide this. Stability weekly. So we had this imbalance here. And I'm going to get rid of this too so we can get a clear chart. Sorry, y'all. I actually trade these charts. I just don't mark them up. So we had this fair value gap that was a bigger gap from this low to this high, right? We traded back into it. We stopped just mid of the consequent encroachment of this gap. So again, letting us know that even though we did have that crash to start the month off, right? We still, or did we end July with that? I'm trying to remember now. But either way, it was a monthly. Even though we had a monthly drop, we still pretty much are bullish and making bullish highs on these weekly time frames. So again, making the note here that we stopped just low mid of our consequent encroachment here. So that's a good sign, right? So as I'm looking for us to make lows, there's three levels that I'm going to be looking at the top end of this gap here. So that 19,522 level, the midpoint of this gap, and then probably the midpoint of this wick from last week. So I'm going to get rid of this gap here just because I don't want, I'll keep it there. So when I'm looking for opportunities to go long, it's going to be at one of these three levels. The market probably, we're going to be bullish. We're probably going to hit that level, hit the consequent encroachment of this wick, which is probably here, and then there, the consequent encroachment of that gap. If we don't see that, then we might still be continuing on with the bearish trend. I doubt that though, I think we're probably going to continue to go higher. So as we go into the week, this is one, that's what I'm looking at. And so just to kind of call out these levels, I'm just going to make a marker here that says first level. Let's do this. CE of last week's wick. I'm just gonna make a note of that. And then this consequent encroachment, which is very close to the low of last week. So I wouldn't be 100% surprised if we didn't come back down there and sweep that low and then go back up. Text CE / last week low. So ideally, I want the market to really run for one of these levels for us to kind of maintain this bullish trend and then continue to go higher. So I'm going to go jump down to the daily and see if we get any kind of coordinated stuff lining up with that. So there's a few things, right? I'm going to get rid of this box and make it only visible on the weekly. But as we get down to last week, again, what we wanted to see happen was the market really continue to run higher, right? And so if you think back 2 weeks ago, this is messy, sorry, y'all. 2 weeks ago, our target was this old high, and I made the targets that I said, okay, this high here is our old previous high, this volume imbalance here, and then the high here, right? So those were the 3 levels that I was looking at. We took out the second target, which is a volume imbalance right here, really traded off of this and kind of fell over back into this old imbalance. From there, we traded into this, reached down into this volume imbalance here, and then continue to run up. So again, I made the call, I think it was maybe mid last week that as I was doing charts, that once we hit here, probably wanted to see this continue to go up, either at this level here, this gap, or at that volume imbalance. And we got that. We traded just shy of that. And as yep, that's exactly what happened. So I wanted to see the market really take out this old low, the consequent encroachment of this wick, or this volume imbalance is kind of the levels. That's why I had this funky little arrow drawn out there. If you guys remember, I took most of my trades last month on Euro, so I didn't actually trade NASDAQ at all. Euro futures is what I traded. So we'll talk about that too in a second. So coming into this week, again, we're bullish. That's the thought process here is that, so coming into the week, I want to see the market really kind of retest this area here, or again, actually these same levels again. We could see the market really run for this level here. The consequent encroachment of this gap are the 2 levels that I would be looking for. There's also a very slight volume imbalance that's here. From the last 2 weeks candle. There we go. So I wouldn't be surprised if we did something like this, if we came back down to this level here, which is 19,420, and then continue to run up. But I'm pretty confident in the bullishness. There's a few reasons for that. Again, one, rejection from this overall fair value gap here. This green BISI. If you don't know what a BISI is, I can't help you. Become a student. That's where everybody gets the game out. So again, the second thing is that we traded above consequent encroachment of this old previous wick. So that's kind of letting us know some bullish, that we're probably bullish as well. It's just another confirmation. So ideally what I'm looking for here is, there's a few targets here. My first target will be this green level here at 19,691. I'm gonna mark this first target. And then second target here is going to be the this old volume imbalance again, right? And seeing how we react here. Third target is going to be a little bit different than the last time. I'm going to market this out as a third target here. And I think this is last week's high. Yeah. Yeah, like this is like last week's high or the previous week's high. And then the fourth target is going to be this SIBI here, right? So that target is where I'm going to be looking at. So for the fourth target, boom. So that's the fourth target that I'm going to be looking at. So again, ideally, I want to see the market really, really run for a lower level here. Again, I'm marking it here, but it could be as low as consequent encroachment or even this low, right? So I don't think we'll go back down there again, but I'm usually prepared for like my best case scenario and then my worst case scenario. My worst case scenario is the market running all the way down here, sweeping that low and going up again. So kind of mapping out all the areas that I think price could run to start the week off really kind of gives me an idea not to be scared when I do see those happen again. So like if it doesn't hit my first area, I usually have like a fail safe level. In this case, it would be this level. If we take out this low, we close below it, it's probably going to be our sign that, what I'm projecting for the week is not going to happen. So again, that's why you don't risk it all in all of your trades. You really try to, just if you have to scale into positions, cool, but you don't try to go for broke all in one day. So that's the first thing. So the first level again is going to be this old high. I think Friday's high, Thursday's high at 19,687. That second week, the volume imbalance at 19,874. That third level is going to be 20,027, and then 20,186. Right, it's going to be that final level that started at SIBI there. So that's what I'm looking for, and so I'm really just looking to stay bullish on that for this week. I will make the note that, and I talk to my traders about this all the time, that the hardest level to project is when market is sitting at equilibrium. And for my students, if we're looking at swings, right, we did just kind of tap that discount level with this too. So that's kind of another confirmation that we probably will continue to go up. We reached back into a very, very slight discount, and then continue to run back up. So I think this is going to be a good bullish week. We might see some targets hit, but again, first week of the month, September is going to be a very crazy, volatile month. So I'm going to be looking for the month to do exactly what I want to see before I really start taking any actions in it. So let's go to S&P. Same thing here. Really the same thing, except I think we didn't really reach into a discount. So what happened here is, again, we wanted to see the market. It's pretty much the same thing here. So let me get rid of some of this. So last week has really been consolidation. And actually, let me go to the monthly because I think the same thing is playing out. Yeah, so same thing again. We tap into this weekly order block here. A little bit more bullish confirmation here because there's also a monthly fair value gap here that we did respect completely. So we tapped into that order block, tapped into that monthly. So that's a good sign. Fully mitigated this and that order block. So that's a good sign. It's a really good sign for bullishness of this huge wick. If I'm drawing monthly levels for us to continue on and kind of be month bullish for the entire month, I definitely want to see price stay above $5,343. That sits right under that, underneath that wick. So, or right underneath that fair value gap. So we're good. I think we're gonna be bullish this month. I think we're gonna make new highs. You know, last month was really just us gaining a lot of liquidity. So I'm excited to kind of see where this month goes. I know if you're a swing trader, you're probably looking at that too, like launch. Couple things here. There's a new day opening gap that we fill completely. So I'm good there. I'll get rid of this as well. And then slightly, so if we're looking at like old targets and old highs, you know, really, I think this could be the potential target for this week on S&P. That is going to be the old all-time high. And that is going to be sitting at 5,729. Reason for that is we bounced this old price range here, right? So that was an old gap, old volume bounce, specifically called a new day opening gap. It came down, balanced that out. So there's not really another reason for us to run down here. We also took out a lot of lows. So we took out lows here, we took out lows there, and ran those liquidity levels. We also formed a new imbalance and traded back into it. So it's a very good sign, even though it was very slight. You know, we took out this low and traded back into that old gap. So there's a lot there that I like to see going into this week. Levels that I think we could probably re-hit. I do think we could. There's a potential for us. And I'm going to get rid of this because I don't think we need it anymore. I do think there's a potential for us to return back into this gap, but I'm going to mark out kind of the same levels here. Consequent encroachment of this wick right here. And I'll mark out this low, which is the top end of this gap too. So these are the three levels that I'll be looking at. Right here. So ideally, once the market do something like that, it can go up. It might not go that low, but again, I'm just from a weekly perspective. Let's see. So again, that level at 5,603, the top end of this gap at 5,564. I do think there's a chance we could dig deeper into this gap too as well. If I had a third level that I would be looking to potentially buy at, it would be this level right here. The market is usually only going to run for like one, maybe two of these levels before it makes its reversal. So I'm not just kind of pointing out levels and saying I'm just going to try and buy at these levels. I'm just looking for specific things to happen at these levels in the lower time frame. So again, going to the daily time frame, we had a little bit of a consolidation here, which is a good sign. So we consolidated, kind of dove back into this gap here, and the smaller volume imbalance here, if you guys can see it, there's a volume imbalance between these two candles. This is called a new day opening gap. So we traded back into that. Damn near respect the consequent encroachment of that. I know you can't, people might have a hard time seeing that, so let me make that a different color. Make that white. And then really just decided to turn right back up, right? So that's, we started aiming for these highs. And on top of this, really gave us some good highs here that we haven't broken yet. So I'm assuming there's probably a lot of volatility up there. Same thing as NASDAQ. This market gave us good breaking of consequent encroachment of a previous wick. So again, this is another level that I'll probably be watching for us to trade back into and or respect. But ideally, what I want to see, and I'm going to go to the 4-hour really quickly. Yeah. We're going to be very bullish, I think, this month. Same thing as NASDAQ again. We have this old other volume balance that's sitting right there. So there's a lot of good signs of that this market is giving us bullish intent. Might look at this level here at 5,611, which is the top end of that gap, which kind of lines up with what I said earlier, for us to continue to run to these highs. I think that's what I'm going to be looking for. Also, we'll kind of want to keep noticing how price responds to that 5,641 level, that consequent encroachment. So if we're very, very bullish, like volume and volatility is on our side, we won't even crack this low. But ideally, I think we're going to come back down here. We'll see though. So I'll be looking, kind of like narrowing it down. I'll be looking at these two levels really, with the idea that we could come back down here because we barely mitigated this. There's a lot of liquidity here, but I have a feeling since we respected that volume imbalance is kind of like the weakest liquidity marker, right? And again, I talk about this with my students. If you have no idea what I'm talking about, then become a student, get off the sidelines, and maybe you can analyze the markets as good as this one day. So, look at the volume imbalance here. Since we respected that, that's kind of like the weakest level of a liquidity marker that I look at. And so I think that we're going to continue to go up. So that'll be my target for ES, especially if we respect this one as well. So I think we're very bullish. So let me go to the comments. 10 years, you've seen it all happen. I've seen a lot happen, man. I've seen a lot happen. And I feel like even now, I feel like I'm just now hitting my stride as a trader, right? If you go on the Telegram, you can see I've been broadcasting my trades live, or my thought analysis live, for almost 2 years now. It'll be 2 years in January, I think. And so, if you go back in that chat, I've had fun days with like prop firms, 25K days, and like live days of taking up accounts. I've had 30-40% months on personal accounts. So it's like it's been fun, but I know that like as a trader, I'm just now getting started because there's people that I'm chasing, right? I did an interview on Trading Nuts podcast about a year ago, and that's kind of how we got linked up in the first place. And I talked about some mentors that I had that I don't necessarily trade like them anymore, but they just were a huge inspiration to me. Again, I always try to give flowers, but like Q Banks is one of those guys. But we don't necessarily trade the same anymore. He trades a little bit differently than me. Still an amazing trader. There's other guys too. There's a lot of other guys. But at this point now, I like to think I'm one of the best in the world. And so I feel like there's very few people that do this consistently, that put their projections out week after week after week, and with a high degree of accuracy hit them. So I think in the last year, I might have been wrong on like 5 weeks of predictions in the last year, maybe 5. I don't even think it's that much. But when you're in the markets for that long, you see it all happen. You see it all play out. So it's one of those things where, as you get more and more confidence in your skill, you start to be able to do more and more things, and you're respectful of your risk. You manage your risk, you manage your own mental. You just, you become, a really good trader. But I've seen a lot. I've seen markets crash. I've seen markets go up. I've seen elections happen. This upcoming election will be my fourth election, third election, as a trader. So watch the markets react to those. We've seen, market worldwide, conditions that caused the market to crash. The big one that happened 4 years ago, Brexit, like all those things. There's been a bunch of market situations where I've just watched the markets go up and go down, and you just learn, right? You blow accounts, right? That happens to everybody when you first start, and then you learn, right? And so I still lose trades. I still lose a lot of stuff, like a lot of trades, well, not a lot of trades anymore because I'm more select. I'm very selective, but I still lose trades. I still have, weeks where I'm wrong with my predictions, right? Um, and the main thing is that, when you start realizing that trading is more of a mental game than it is anything else, that causes you to stop doing dumb stuff, right? It causes you to stop over trading. It causes you to stop. Um, it causes you to stop trying to make it all in one trade. Like you're not going to be. I mean, you can make a lot in one trade. Don't get me wrong, right? Like I had a $4,000 trade on Thursday, but if I consistently try to shoot for big days, like big trades, big wins, then um, it's not going to. I mean, you probably will blow it trying to make it. And so base hits, right, are the thing that you need to be striving for. So that's just stuff that I've learned managing myself. And the more I learn about trading, the less I actually worry about my strategy. My strategy is legit. It plays out week in and week out. I spend a lot more time trying to manage my head and manage my mental than anything, and put myself in positions where I'm not going to emotionally trigger myself. Like putting myself in crazy amounts of drawdown. So I'm reacting to every pip movement, um, and stop seeing the bigger picture for what it is and stuff like that, right? Or getting too happy when you're up in a trade and starting to double down, right? Like how many times have you been up in a trade and you doubled down way too early or way too often and that thing came right back down and took you out? Or you were in drawdown and you just lost the trade, you start freaking out, and so you just doubled it down again. So all that stuff is stuff that like I've learned, and I still fight it every day. Like, don't get me wrong, like I damn near doubled an account last month, and I still have moments where I'm like, nah, forget it, go for broke, right? Like nah, we're gonna double down. Like you're up, you're good, you know what you're doing, you're the best. Double down, right? Like those things never go away. Like you're still gonna be fighting those things, but you have to kind of put those things to the side and realize that any trade can lose, any trade. Any trade can win, any trade can lose. And so your job is just to manage the odds. And the odds are, if I just consistently take base hits, yeah, you're gonna have big days, but your goal should be never to have a big loss. So I really just play not to lose, if that makes sense. So yeah, so let me go to Dow Jones. I know Lizzie was in here and she was like, I'm here for Dow Jones, I'm here for US30. But I know I've been taking a long time to get into that, so let me go ahead and do that right now. So Dow Jones is going to be the same thing as US30. If you guys are familiar, it's YM. Dow Jones Industrial Average, aka US30, aka this is actually US30. This is not my Dow Jones one. All right, well, next week I'll have my Dow Jones actual chart, but it's the same thing. So if I add futures, I type in Dow, DJ, or YM, E-mini futures, same thing, same chart, pretty much, right? So yeah. So anyway, US30, right? Since this is the one that I feel like everybody loves to trade. All the Forex people love to trade US30. I think it's because Q Bank started that. Like he was the first one to like really trade US30 and just kind of became the thing. So anyway, so we took out the all-time high on US30 right last week. So we are trading at an all-time high now. So this is a week that a couple things can happen. Whenever we take out an old high, I like to sit back, right? And I like to kind of see what's happening, what's going to happen next. Are we going to take out this high and then crash? Excuse me. Or are we going to take out this high, continue to go higher? I think based on what's going on with the other two, I'd like to lean higher. But again, a lot of consolidation here once we took this out. So I'm kind of just saying I sit back. I don't know why people, I do know why people like again, like I said, Forex traders love trading US30 because again, a lot of it's just a popular one to trade. It's actually the worst indice to trade, to be honest with you. I think the other ones give you way more consistent results and they're way more aligned with everything. Half the time, Dow Jones or US30, whatever you want to call it, acts like the redheaded stepchild of the markets. So we had a hard time really breaking through this high here, right? We kind of swept this high a couple times. and we've closed above it. So really what I would like to see and is the market really run for a low and then continue to run higher. So something like this. Green. Okay, something like that is what I would like to see. But again, we are sitting I think it's a good sign that we opened up a fair value gap above this high. It's letting us know that there could be a lot of room for us to continue to run higher. And then based on everything we're seeing on the other ones here, I just don't think there's I like to have a lot of risk, a great risk to reward on my trades. And if I don't really ever pull this tool out much because I can kind of just eyeball it, but I'll show you. Where's that? I swear I use TradingView every day, and I still don't pay attention to where stuff is at. Okay. So if I were to enter into this trade, right, or if I was to enter into a position, obviously the risk reward wouldn't be as big as this. I wouldn't enter in this time frame. I enter in much very lower time frames. But the opportunity here is there's not that many. If you look at from where our entry potentially could be to our top of our high here, where I'm looking for the market to really pull back either at the top of this gap or the mid of that gap. I mean, best case scenario, it's just not a great setup, right? So my stops will probably go underneath here, or my invalidation level. So because I wouldn't enter this high on the time frame. So I guess let me cancel that and say this is that my invalidation level for a bullishness idea would be here, right? So that means as long as we're staying above these highs or this low, I still want to see the market continue to run higher. With that being said, there's just a lot more opportunity to be wrong, and the reward isn't necessarily there. Whereas if you look at NASDAQ, right, since we know our goal is going to be that all-time high, which is all the way up here. Thank you. All the way up here, there's just a lot more room to have fun, and there's a lot more confirmations that I think for bullishness. So I'm not saying it won't continue to just rip and run higher, but it's just like, where are you putting your, I try to go with the highest probability stuff. So with that being said, I'm not really trying to do that. But this is what I'd like to see happen this month, this trade to this high. So there's a good 300 or 400 potential, somewhere between 200 and 400 points. So this high here at 41,504. Let me zoom in so you can see that. And then 41,424. So those two are the levels that I'll be looking at, and taking it up to 41,600. So again, invalidation level would be that low, but you don't really know. So again, I want to see a bit bullishness happen, but US30 is just never fun for me. And maybe I need to stop saying that, but it's just not. The setups just always seem cleaner on NASDAQ. But again, most of the time they're going to follow what happens on the other two. It's just a little more sporadic, and yeah, a lot of people like it more, so I get it. Lizzie says it's simple. It shows the same setup over and over again. I mean, if that's true, then go for it. I'm not gonna say all these markets still operate on the same principle. You can trade any of these things and do it, and win. I'm not saying that I could probably have a whole month, just the way that I didn't trade NASDAQ and I only traded Euro futures this month. I could probably have a whole month of just trading US30 and probably be fine. It's just, why go through the one for me, I just want to take the one that's easiest to me. And if it's easiest to you, go for it. But it's, I think NASDAQ is better. So maybe I'm biased there, but LH said, how do I become a student? Find me on social media. Brinks Trades. That's my social media. If you go there, you can find a link to my Telegram. You can message me directly on Instagram if you're interested. I've been taking my time with a lot of the students that I have and making sure that they're good to go. But I might be taking on new students soon. Just come ready to work. That's all that matters. Just be ready to work, because I give a lot to my students. I give as much as they will, will accept from me. So, and I'm usually very available for them. So I try to be. I still do work a full-time job on top of this too. So, Raymond Jackson, what's going on, sir? What's going on? Man, we got to get you trading like this too, man. We gotta get you. You gotta chop it up, man. Hit me on Telegram or hit me on Messenger, man, so we can chop it up. Definitely gonna be interesting. Appreciate your analysis. Appreciate it. JS561, appreciate you too. Lizzie says, is it possible to check GBP USD? Yeah, so I'll do you one better. I'm actually gonna look at the futures version of GBP and Euro USD. It's gonna be the exact same thing, but again, I trade the futures, so it's going to be the same thing. So I took some trades on GBP last month too. So I've primarily focused on GBP USD or GBP futures and Euro USD. So I'll take a look at these really quickly. So, and then that's it. I think it's all I got time for today. So there's a couple of things that happen. So ideally what I want to see, so going at the monthly time frame, it's a new month, just had a huge wick. So a huge momentum that we took out this old high here. And we closed underneath that high. So that was in the monthly time frame. So that's not a good sign for continued bullishness. We could continue to go up, and I can't really bet against that, but I'm also very cautious when we take out old highs. Just because sometimes it's hard to tell at first glance whether we're taking out an old high to continue to go higher or taking out an old high to continue just to run lower. Some good signs in the weekly though, right, is that we have strong structure with a lot of imbalances to the upside. And so we took out our last week, a couple weeks ago, our long-term target, and this past week we took out our target. We didn't get quite as high as I thought we were going to. I thought we were going to swing that high and really run up into this old volume imbalance. That was kind of like my target for GBP USD. That target was at 1.331. I'm going to get rid of some of this. But we did create this old volume imbalance here. I like that. With the secondary one right there. I like that too. So ideally, I can't really bet against bullishness yet. So ideally, that's what I want to see, is us really run back down into that gap and then go higher. If we break this down to a daily, this is that weekly gap that I just showed you. Let me get rid of this. I want to see the market really run and respect a few levels. I have a really good feeling that this will be. We traded back into this old fair value gap that we didn't respect. I thought we were going to come here Thursday, we had traded off of that high and respected consequent encroachment. We didn't. So ideally, I think what's going to happen here, the long-term play is, I think we're going to have maybe Sunday, Monday come down, and we might run to this gap that's inside of that weekly fair value gap here. I know there's a lot of overlapping stuff here, so I just want to make sure everybody's clear. I think that we'll come and run to this gap here that starts at 1.3077. to start the week off. Like Monday, have a huge bearish day. And somewhere around here, kind of like make the reversal for the week. If I had to guess, we might not get that low, but I'm bullish long term still. I still think we're going to probably come back up here, especially if we start respecting this gap. So I think that's going to happen, but just where are we going to try and turn around at? Well, I think this might be a good strong area for us to do that. The only other level I could see would be the just under consequent encroachment of this gap here too. So ideally, this is probably the strongest candidate. So let me get this out of the way. So ideally, that's what I want to see, is the market really kind of Monday, Tuesday really come out here, and then somewhere around maybe like halfway through the week, make the reversal and start to go back up. I don't know if we'll get back all the way up here this week, so I'll be looking for us to kind of trade to that target. That's pound futures or GBP USD. Let me look at euro very, very quickly, and then I'm off this thing. Let me see. So let's trade it back into this gap. Yeah, I mean, same thing with euro. I mean, we're trading into this gap. We respected this one, so this is a little different. So we're around respecting consequent encroachment. There's two levels that I'll be looking at. Us staying around here or running to this order block here. But I think either way, we're going to be bullish. So I either want to see the market run for this level at 1.0500 or 1.10141 for us to continue to run higher. And I'll be looking for us to trade back to this SIBI here. Okay. Yeah, I think long term, and again, looking at the monthly time frame, I'm just gonna zoom up and see. Yeah. Yeah, for sure. I could see us doing that. For sure. Because there's on the weekly time frame, there's a very, very small imbalance here. Visibility. Right here. So maybe run into that and then going higher. We'll see though. Again, I'm not going to be trading the first few weeks or first few days of this month, only because I just want to see what the market's running to. I want to see what we're going to respect, what we're not going to respect. And we could just crash, like we could just run and keep running down, right? So again, I just want to give it some time. It's going to be a lot of volatility. So yeah. So if you guys have any questions at all, I got a couple minutes. But I think that's kind of all that I wanted to walk through. Again, if you guys are if you want to know a little bit more about how I do this every week, how I'm able to come here and consistently call things out, how I'm able to take accounts from 10,000 to 17,000 in a month, let me know and hit me on social media, hit me on the Telegram chat, and we can talk about it. US30. So I'm going back in these comments. US30 has been a mess this year. Lots of consolidation. Yeah, it's also an election year too, and so sometimes a lot of uncertainty in the market. And sometimes when they're consolidating like this, like higher, like even like euro and GBP, it's really been consolidating for 2 years. Like it's been like this since January of 23. So like a year and a half of price action. Whereas you look at before, it's been ranging and moving. sometimes you just have to you have to change your trading up. You're not just going to get long swings out of the market. You're not going to get crazy runners. This is just a year to get through a lot of the times, like if that makes sense. Like you still have big wins, right? But it's not going to be like these crazy monumental, like, man, I just made $30,000 in on a $5,000 account kind of years. So not that you should ever have years like that, but that's just kind of how it goes. So all right, well, if you guys have any questions at all, feel free to, again, hit me in the chat. Shout out to, again, Lizzie, Raymond Jackson, Tony Gold, everybody that commented, just kind of had some questions. So find me on social, find me in the chat. Yeah, I'd love to do it again next week. Hope everybody has a good holiday weekend if you're in the US. And then, yeah, catch y'all next week. Yeah, sorry. Brinks Trades is my Instagram handle. So I just dropped the link in the chat right there. And then how do I take entries? Just a brief. High level, yeah, I'm using all the stuff that I talked about. This is what I'm showing the world is only half of the technique. There's entries the entries basically are a combination of matching the higher time frames and lower time frames. And I'm looking for a few things to turn around. It's kind of a lot to go into on a call. But again, if you're one of my students, you guys got all the sauce. So, but that's my Instagram handle. Find me on Instagram. We could talk a little bit more off there. That works. And that goes to anybody that's a little bit interested in that as well too. So it's a lot to break down on one call. But I'd say like the majority of like my boot camp with my students trying to teach them how to do this. So all right, peace. I will end the call. Have a good weekend.